what happens now? Simple. We have to remember that not everything hinges on trade. We always seem to forget that. It's a common refrain, particularly from the mainstream media. Plenty of companies will do just fine if these tariffs stay in place forever. And aside from China, there are a lot of things that are going right, including getting a lot of business out of China. First, the United States is a service economy that's pretty darn close to full employment. And when you get service and full employment, you get a lot of sales and a lot of money, particularly in housing. Second, we have powerful secular trends that are going on here, like digitization. We'll talk to Salesforce and Coupa later. Medical innovation, a lot of those biotechs being taken over that don't have anything to do with the trade war. Third, when tariffs go up, economic growth slows a bit, and that causes bond prices to rise. When bond prices go up, their yields go down, and then money flows into higher dividend-yielding stocks. Fourth, some of our retailers are so powerful that they can squeeze even their Chinese overlords, so to speak, to keep prices down. If you have enough scale, the tariffs simply don't matter. Go ask Walmart, go ask Target, go ask Amazon, they'll tell you. Finally, when you look at the composition of the averages themselves, the industrials are a lot less important than they used to be, which means the tariffs can't hurt us as badly as you might think. Ironically, China's been so great at destroying American manufacturing, they've created a world where the United States doesn't have that much industry. And for that matter, industrial stock market capitalization left to lose. In other words, it hurts China a lot more than it hurts us. And the longer these talks go on or drag on, the more business you see taken out of China and going to the Philippines, going to Indonesia, going to Vietnam, going to Thailand, going to India. So then, if that's the case, why can't we shrug off these trade talks entirely? Mostly tech. Yep, we have immense technology companies with tons of business in the People's Republic, including the largest company on earth, Apple. The idea that Apple stock could somehow crash if China decides to go after them has been a major theme on every one of these down days, even as the stock has rallied more than 100 points since people started fretting about this. But what happens here is that the negatives surface first, and they bring everything down. Then the stocks that don't have anything to do with China bounce back. Nevertheless, much of tech keeps getting slammed, and that's the real issue we face right now. While I think that will eventually create fabulous discounts, we're not totally there yet. Bottom line, the market is slow to figure out the positives, very fast to identify any negatives from the trade war, which is why we have days like today. And unfortunately, I think we could have more faux, that's F-A-U-X, trade-related pain before we're ready.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.